I know you are Bitcoiners, not coiners.
Yes.
The principle of confirmation is really vital. And if you look at the weekly chart, we will see it later. Ethereum is really going nowhere, and I would say with a downward bias. And look what happens afterwards. There are blue horizontal lines that highlight the bounce highs, and then Bitcoin broke up above this level. Sentiment is extremely important on two ends. First, your end, because your psychology can betray you, and secondly, sentiment as the collective on the daily chart. Because Maurizio, this was one of your questions. That I also want to have the larger perspective. So, what would it take to get bullish? Because you want to know that the prevailing trend tends to persist. So, if the trend is bearish, the odds are that it will continue to be bearish. But for me, Bitcoin and gold are two very special assets, which is inflation protection and I would say Armageddon,
Yeah.
Armageddon protection. I suspect one day Bitcoin will be what it's supposed to be, the greatest insurance. And maybe one day the stock market will go down because there is financial reset, whatever. And then suddenly, this morning, you will wake up and see Bitcoin at 300, 400,000, whatever.
Where do
Yeah.
you see Bitcoin going in the, I don't know, in 2025? Do you have a target, a top target? Do you have a bottom target? What do you see in the charts? Hey guys, welcome back to the show today. I'm here with Manuel, which is editor-in-chief of TheDowTheory.com. Manuel, how are you doing? ¿Qué pasa?
¿Qué pasa? Todo bien, tutto al posto. Everything is fine.
Amazing. I'm super excited about this chat. I know you put together a presentation for us, so thank you so much for doing that. But before we dive into the presentation, do you mind to give us an intro and tell us a little bit about yourself?
I was a lawyer by trade, so the first savings were made as a lawyer in Europe. I'm a Spaniard. And well, I've been a lawyer for many years. And then once you begin saving money, you have a problem. You have to invest your money. And at that time, there was no Bitcoin. I'm talking the late 80s, early 90s. But of course, then you have two options. Either you send the money to the local savings bank around the corner in your city, or you decide to become smarter or well, more skilled and say, "Well, look, I want to do a better use of my money." So I got really interested. It was, I tell you, the early 90s. I became interested in the stock market. There was no internet. I'm talking of 1991, 1992. At that time, Spanish bank, Banesto was his name, was bankrupt. And then the stock went almost to zero. And then, well, I didn't know anything. I knew much less than now, but I said, well, look, it's too big to fail. So another bank, Santander, another Spanish bank will take over, I think. So then I went to my local banks. I buy me many shares of Banesto, this bankrupt bank. And well, eventually, after a couple of months, Santander, another big Spanish bank, took over Banesto. And then, of course, the share exploded, and I think I sold out after 2 years for a tenfold or 15-fold profit. And of course, this got me hooked. For me, it's like it was a wow. I put, I don't know, whatever, $3,000, and then wow, it multiplied by 15. So then I got interested. Then came the internet, and then of course the internet opened for me the doors to the USA, and said, look, Spain is really very local, but there is the US stock market. And I started through Amazon buying books on stocks. And I said, wow. So there is lots of bullshit out there, but also there are a couple of good books. So then I really became, I was still a lawyer. I was still a lawyer. I was still making good money and my savings were going up. But of course, I was becoming more sophisticated. Eventually, around the year 2000, then I decided to move to the Dominican Republic. I said, well, thanks to the internet, I could still manage my things as a lawyer, but I didn't need to be present. And then little by little, I began the transition from being full-time lawyer to being also part-time, then full-time investor. And this is a little bit my story. Then I joined the board of a money management firm in 2006, 2007, 2008. So this gave me more exposure to the financial markets, because of course it's different when you are the investor, but also when you are in the board of a money management company. So I learned more things, practical things. And then eventually I completed the transition. I said, look, I want to be fully devoted to my trading, to my investing activity, because eventually you cannot be both. So eventually I was brave and I said, okay, I quit laws. I quit practicing laws for good. And I've been for some years now fully devoted to my own investments. And I'm also the editor of TheDowTheory.com. This is a stock market, and also crypto, Bitcoin in particular, market timing letter. And I did that because, of course, I was managing my own money. And I said, look, I have to know when it's time to buy and when it's time to sell, because I'm a market timer. I don't believe in buy and hold. Maybe you can hold some Bitcoin and some gold, but for the rest of investments, I really believe you buy today and you sell tomorrow. I don't believe in buy and hold forever. You have a company today that is successful, and in 5 years is out of business. So then, of course, then I started to learn also how to trade long term. And eventually, after trying many things, I became convinced that the Dow theory was one of the best trend following methods to time not only the stock market, to time gold, to time Bitcoin, to time many things, any asset. So this is story. So eventually, this company, TheDowTheory.com, was not mine. I was a subscriber to the service, but the owner of the service, Jack Shanep, who is a genius, is really, for me, one of the best market timers in the world. But he was getting old, and then he said, look, I think you would. I was a subscriber, but he invited me to join because we were always in touch. I was always making questions to him, and he was always answering. So he said, I think you are one of my subscribers that really understands best what I do. So eventually I was invited to take over his business. I said, why not? And here I am. So I took over his business, the TheDowTheory.com newsletter, and also I am a full-time investor for my own money. So this is, long story short, this is my story.
Amazing, impressive. Thank you for sharing your story with us. And I've seen your video with Alessio Rastani, which I follow extensively. A big fan of Alessio. I've
He's
been
a great
trying to.
guy, a great market timer, really. He's a great market timer.
Okay, so who's better than you to explain to us what is the Dow theory exactly?
Yeah, the Dow theory is a trend following method. And since we are in a Bitcoin YouTube channel, it also serves to time Bitcoin. So don't think we are going to talk about stocks. No. But of course, the Dow theory was first developed as a stock market timing system. So it was discovered by Charles Dow 130 years ago, in the end of the 19th century. It has worked and it was applied to stocks. And of course, this is an extremely long track record of being successfully applied to the stock market. But the issue is whether we can apply the Dow theory to other markets like Bitcoin, for instance, gold, energy, oil, precious metal miners. And already in the 1920s, already 100 years ago, Hamilton, who was also the successor of Charles Dow at the Wall Street Journal, said that he believed that the Dow theory, because it's trend following, could be applied to any organized market. But he didn't put it in practice. He just said, I believe it can be done, but he didn't do it. And then, as far as I'm aware, nobody tried to apply the Dow theory to other markets. So the Dow theory has been applied for all these years to the US stock market. And then around 15 years ago, I started a blog, not my website, just a private blog. And I said, look, I'm going to do in real life what would happen if I applied the Dow theory to gold, silver, to the gold and silver miners, energy, and bonds, US bonds. And well, Hamilton was right. It works. So, and it makes sense. What is work for me? It means that you outperform buy and hold while you keep your drones short. You cut your drones. So you get more performance while you reduce your risk. One important thing about the Dow theory, and it has to do here in this YouTube channel, because I know you are Bitcoiners, not Bitcoiners
Yes.
is no, and this is important because with all due respect, I will have to talk about Ethereum, not because I believe in Ethereum, but because we need it for timing Bitcoin. So when you are under the Dow theory, yeah, you use the principle of confirmation. What does that mean? For instance, when you are in stocks, you take the Dow Industrials, but you also look for confirmation by the Dow Transportation. What does this mean? It means, for instance, let's imagine that the Dow Industrials is making a higher high, but the Dow Transportation does not confirm. It still remains below the last recorded high. So this means that the Dow Transportation is not confirming the Dow Industrials. So according to the Dow theory, this higher high by the Dow Industrials unconfirmed by the transportation means that we don't get, for instance, we don't get a buy signal. No, I'm sorry, it's making a higher high, but the trend is not confirmed by the other index. It's the very same thing with Bitcoin and Ethereum. Do I trade the transportation? No. What I trade is the Dow Industrials or the S&P or the Nasdaq. I don't trade the transportation because it's the laggard. Long term, it has a much weaker performance than the Dow Industrials or the S&P. But nonetheless, we need other transportation to derive confirmation. And the very same logic applies for me when I use the Dow theory and I apply it to Bitcoin. I will trade Bitcoin, but nonetheless, I will use also Ethereum. We will see later on this show, we will see later the charts. I also keep an eye on Ethereum to look for confirmation. So why does the Dow theory work? I say, okay, that's beautiful, but why does it work? And from on, I make a very strong claim. I said, look, for me, is the best trend following method. Those of you that know maybe a little bit about trend following, you know that there are moving average, breakout systems, rate of change. So there are several ways to regression. There are several ways to appraise the trend. So why I make the bold assertion that the Dow theory is the best timing system in the world, and I will tell you why. First, because it works, and when I say works, it means that you can measure outperformance and drawdown reduction because it has non-parametric nature. What do I mean by that, non-parametric? For instance, when you are using a moving average, you say, okay, for instance, it's very famous to time the stock market with a 200-day moving average. I say, look, if it's above the 200-day moving average, it is bullish. If the price is below the 200-day moving average, it's bearish. And okay, more or less, it works in the sense that it will mitigate a little bit your drawdowns, but forget about outperformance. I'm sorry, but at best, you will do the same performance as buy and hold, and with a little bit maybe of drawdown reduction, but nothing stellar, nothing exceptional. And this is why, and why? Because it's parametric. Because I said you're using a 200-day moving average, and a 200-day moving average may be good in some market conditions, but maybe is not good in another market conditions. So in the very moment you use parameters, and now it gets very mathematical or statistical, you have a great risk of overfitting, and that the past is not going to be predictive of the future. Another example, you can have a breakout system. Breakout system is another trend following method. For instance, you say if the price breaks up above the 20 days high, then it's buy, and if it breaks down below the 20 days low, then it's a sell. Okay, but it's the same. It's a parameter. You're taking a 20 days high on the chart or a 20 days low on the chart, and sometimes it is a relevant pivot. And look at my hand. Sometimes yes, it's a relevant pivot. But sometimes the 20 days high is just a dot in the chart. It has no real value. And this is why this is the risk when we use parameters. We are not talking about the 20 days high or 200 days moving average. We use the concept of secondary reaction. I'm not going to explain it here because it's too long. And then we go to the second point in this slide. Only relevant pivots matter. What do I mean by that? Since we are not using a 10 days high or 20 days high, we isolate on the chart really relevant pivots. So the ones that are really relevant, whose breakout or breakdown will entail a signal. Furthermore, third point, to determine these relevant pivots, we use the time and extent requirements. What do I mean by that? So not every pivot you see on the chart is going to be relevant. So we require some time for this pivot to form and also some extent. For instance, according to the Dow theory, we require 3% minimum movement on the S&P 500 and one other index. And finally, we go to the principle of confirmation. All these things apply to one index. Let's take the Dow Industrials, or let's take Bitcoin, for instance. Let's take Bitcoin, gold. But then we want a related asset, not the same asset, but a related one to confirm. So the first 3 points, non-parametric, only relevant pivots, time and extent requirements, we want all these requirements to be fulfilled in another similar asset. For instance, when we are trading the stock market, we take the S&P and we look for the Dow Industrials or transportation. It's not exactly the same, but they tend to move in tandem. Not exactly, and this is the good thing. We need the second asset to be quite close, but not exactly the same. If we had a correlation of one, then it's worthless, because if it moves exactly, then confirmation is worthless. It will always confirm. So we need something that moves similar, but not exactly. Okay, Bitcoin is the main asset. Okay, what I explained. But what do we do with Bitcoin? Okay, this is the asset I trade because I don't believe in Ethereum. I don't believe in it. But nonetheless, Ethereum is like dancing tango. Is the couple I need to dance Bitcoin to time the market when I use the authority. I repeat, the principle of confirmation is really vital. So even though, because I know many of you listeners will be thinking, look, Ethereum is going nowhere, and Ethereum has not bettered, I think, the last highs 2-3 years ago. And if you look at the weekly chart, we will see it later. Ethereum is really going nowhere, and I would say with a downward bias. So then you would say, how can you use Ethereum to time Bitcoin? Yes, because it's the same as the Dow Industrials and the Dow Transportation. If you look at a very long-term chart, you will see that the Dow Transportation, well, went up, but really very modestly compared to the Dow Industrials or the S&P or the Nasdaq. But nonetheless, when there is a rally, both rally. You will say, yeah, but the S&P rallies more. Yeah, but I don't need that. I just need confirmation. So when there is good health for Bitcoin, normally Ethereum also goes up. Okay, it will go up less. I don't care, but it goes up. And when Bitcoin is weak, Ethereum will be even weaker. This is normally what happens. But nonetheless, we get confirmation. So for instance, this slide, it was taken from a recent post. The principle of confirmation prevented the triggering of false signals. You may observe the top chart is Bitcoin, the bottom chart is Ethereum, and you will see the blue rectangles, which means a secondary reaction. We were already in a bearish trend. Bitcoin was on Ethereum, we're on a bearish trend, so lower lows. And then we got a secondary reaction, a bounce. So we are still in a bearish trend, but you see the blue rectangles, then we get a bounce. And this is good news. Oh, the bounce, then we had a pullback, this small brown rectangle, there are small brown rectangles, and this pullback set up Bitcoin and Ethereum for a new bull market. And look what happens afterwards. There are blue horizontal lines that highlight the bounce highs, and then Bitcoin broke up above this level. So if I only use Bitcoin, I would say, look, new bull market, buy. But look at Ethereum. Ethereum did not confirm, was just about to confirm, but did not confirm, did not break up above its secondary reaction highs. So lack of confirmation by Ethereum told me that the odds were very high for this Bitcoin breakup to be a fake out, so to be a false escape, a false breakout. And you can see in the chart what happened afterwards. Then Bitcoin went lower and even broke down below the last recorded low. So the bear market was again confirmed. And then it gets interesting. Then we get the gray rectangle, okay, on the right side of the charts. And then once again, we get a new bounce. Once again, we get hope. Maybe we get once again a buy signal. And Bitcoin once again broke up above the highs of the gray rectangle. And what happened to Ethereum? Once again, Ethereum failed to confirm. And this is not shown in this slide, but then Bitcoin and Ethereum both still had another leg down. So, in other words, may not like Ethereum, but using maybe not the best asset, but it's a correlated asset, helps you improve the quality of your trend following in order to know whether a breakup or breakdown is the real thing or not. This has been tested and used with gold, silver, bonds. So the principle of confirmation works.
I've always been fascinated about trading because I don't understand any of it. I don't trade myself, but I like to look into these charts and speak to experts like you, because I believe, and tell me if I'm wrong here, but people trade assets. So if you understand people, you understand trading, right? Because at the end of the day, when there is a rally or there is a retracement, it's because people are either buying or selling, right? It's a speculation from both hands. Maybe it's one of the buckets you have in your bag of indicator to understand the market, because people are actually the market, if it makes sense.
Sentiment is extremely important on two ends. First, your end, because your psychology can betray you, and secondly, sentiment as the collective sentiment of all market participants. Furthermore, I keep an eye on the Bitcoin Greed Fear Index. There is a Bitcoin Greed Fear Index, and it normally helps you time bottoms. For instance, let's imagine now we'll see later, we get a breakup in Bitcoin. And then, of course, if sentiment is still depressed, this is bullish because when Bitcoin is making a higher high, ideally confirmed by Ethereum, but sentiment, for instance, here is still in the gutters, then it's a good thing. So, yes, sentiment is very important. Also, your own sentiment, because it really can betray you. So, when I started being a trader, I took a psychology course just to know who I am, which is very
Wow.
important, and how to master my emotions. Because trading sometimes is not easy, and sometimes you get whipsaw. So you sell and then you rebuy at a higher price level, and this is the price you pay to avoid a big drawdown. So eventually you will make more money with lower drawdowns, but in any given trade, anything can happen. On February 25th, 2025, Bitcoin broke below its January 13 secondary reaction lows and confirmed Ethereum previous breakdown. You see, once again, principle of confirmation. The trend shifted bearish, and from that time there was a significant leg down. But once again, you see on the right side of the chart, a blue arrow says bull market. We were in a bull market. Then we have the brown rectangles, which is a secondary bearish reaction against the bull market. So we are still in a bull market, but this downward movement is like a warning sign. Watch out! It's a secondary reaction. We are still in a bull market, but watch out. Then we get a rally, these small blue-gray rectangles, which this is the setup. This sets up for the potential bear market signal. And then you see on the bottom chart, Ethereum as the weakest was the first one to break down. There is the red downward arrow. So the first to break down below the last significant lows was Ethereum. So for me, this was not a bear signal for Bitcoin because I wait for confirmation. So Bitcoin must also break down below its secondary reaction, its lows. But eventually, I think it was on February 25th, then the second arrow, then Bitcoin broke down. And then once again, then you get confirmation. And then we have extremely good odds of saying that the trend has shifted to bearish. On the daily chart, because Maurizio, this was one of your questions, that I also want to have the larger perspective. So we are here focused on the daily charts, and sometimes the trend you see on the daily chart is not necessarily the trend you see on the weekly, and this is not a contradiction. So my global assessment, when I look at the weeklies, at the weekly chart, I consider the current drawdown just a reaction, but not a bear market. If you shorten your time frame and you look at the daily chart, then in this perspective, I am in a bear market. And it's not a contradiction. Both readings means that the price is going down. When you use the weekly charts, I say it's a correction against a bull market, but it's a correction. Correction means it's going down.
Different time frames are indicating different sentiment. You could be bearish on a daily and bullish on a weekly, for example, right? So thank you so much for clarifying that, because someone could see a bearish trend into a bullish moment, right? So it depends on what kind of a time frame you look into it. So thank you for pointing it out.
And sometimes it can be even contradictory. Let's imagine that you on the weekly charts, it's really extremely bearish, but you get a bullish signal on the daily chart. And sometimes for traders, it is a tradable opportunity. And you will say, no, but you are contradicting yourself. No, I'm not contradicting myself. But
Yeah.
in this case, it's even easier. On the weekly charts, we will see later, the market is going down. It's a correction. I don't qualify as a bear market, but this is a serious correction. And on the daily chart, it's a bear market. But in any instance, both assessments it's going down. So there is no discussion.
Well, I have a question I forgot to ask you. I wanted to ask you that from the beginning, but I forgot. Super interesting, by the way. Again, thank you so much for putting this together. I really appreciate. I like that you're using Ethereum as a confirmation. Is that because it's the second largest in the crypto? Why have you picked Ethereum?
Until now, because it's the second largest, because one of the tenets of the Dow theory, it must be a market with enough liquidity. So to derive signals, valid signals, you need volume. So if it's a very thinly traded coin,
Okay.
then
This is
the
irrelevant.
movements can be really unpredictable. So this is one of the requirements that they say, look, this is why Hamilton 100 years ago said, any organized market. And you would say, well, there is also a market for Ripple or whatever. Yes, but we need volume.
That's what I assume. That's
And,
why
but
I said, yeah.
your question is great. I hate so much Ethereum, at least on the charts, that maybe one day, because a trader must be flexible. What works today maybe will not work tomorrow. So maybe one day I will have to look for a substitute for Ethereum, because until now it has worked very nicely when I look for confirmation. But what if Ethereum really one day starts to diverge from Bitcoin, and Bitcoin permanently goes most of the time up while Ethereum goes down to zero? Then this is not the suitable couple to dance tango anymore. You can see on the charts, when Bitcoin is going up, Ethereum goes up less, but it goes up. So it's okay. And Bitcoin goes down, Ethereum goes down. Okay, it works.
Even if you take Ethereum out of the equation and you measure the entire altcoin markets without Bitcoin, behave exactly like Ethereum. So it makes sense.
I'm keeping an eye on Ethereum. Until now, it has worked. But I'm skeptical about Ethereum, and I don't like the charts. So, well, let's see what happens. We are flexible. I said we are bearish on the daily chart. So, what would it take to get bullish? Because you want to know that. And then this chart explains. Until now, we've been, well, the trend is down. But you will see on the charts a blue-gray rectangle, which is a secondary bullish reaction against the bear market. And you will see top Bitcoin, bottom Ethereum, and both, as always, Bitcoin rallies more, but I don't need. I just need confirmation. Rally, both are going up. And then after going up, they started to go down, and they went down so much. A red arrow is highlighting those lows, were broken down again by Bitcoin, and once again, confirmation, and by Ethereum. So the bearish trend has been reconfirmed.
Is this what you call the dead cat bounce?
I would say that cat bounce is still a bearish trend. But I have no fixed opinions, because the good news is that if you look at the horizontal blue lines, for me, these are key levels. So if the dead cat bounce breaks up above these price levels for both Bitcoin and Ethereum, then I say that dead cat bounce was not a dead cat bounce. It was a strong rally, and then the trend would shift to bullish. And this is important, because now it's bearish, but you have to be really very swift when you change gears. And of course, according to the Dow theory, if I think it was the March 24th highs were surpassed, were broken up by both Bitcoin and Ethereum, the blue horizontal line, that would be bullish. And for me, on that on the daily charts, the trend would shift to bullish, and then it would be for me a dead cat bounce. It would be the real thing. But until then, I give another tenet of the Dow theory is that the prevailing trend tends to persist. So if the trend is bearish, the odds are that it will continue to be bearish. But of course, as one trader said, the trend is your friend until the
Until the
end
end.
when it
Yeah.
bends. So
Yeah.
eventually we change. But while a trend is operative, we give the benefit of that that it will continue. So any rally in principle is a dead cat bounce, but this is the beauty of the Dow theory. If it breaks up above the blue horizontal lines, then I'm sorry, but this is a new bull market. So
Fair
we
enough.
have objective price levels, and it's important. We need a roadmap. Well, look, on the weekly chart, things look different. If you look at Bitcoin, what I see, and you don't need to be a genius to see, is a bull market. Okay, the price has been going up for years, and now, okay, what I see is a correction, and there was a gap, and this gap was filled. There's a theory. Well, a theory. It's proven that the gaps tend to get filled. So Bitcoin got so ahead of itself in the last rally that one day it really gap up, and then normally gaps tend to get filled, and this gap has been filled, which is good news. I mean, it could imply that the correction on the weekly charts is nearing the end. And furthermore, there is a support, a very strong support at $70,000, which is the reddish line. And furthermore, you don't need to be an expert. You see that it's connecting past highs, so it's really an obvious level of support.
I'm not an expert, but I see a beautiful cup and handle. Maybe I don't know if it's valid, but I can see maybe a cup and the handle, and it broke
Yeah,
out. And
exactly. And you can see, and this is why on the weekly chart, exactly, there is a huge cap, the handle, and this is why on the weekly chart, what I see is just a correction within a secular bull market. So this is a different conclusion from the daily, but it's different. It depends on your time frame. But what I see here is a correction. But watch out. I think this $70,000 support should hold. If it gets broken down, then the next support is at a much lower price level.
49,500.
Exactly. And then I would say, even according to the authority applied to weekly charts, then for me the trend would shift to bearish.
How likely do you think we're going to retest the 70? Because it feels like we want to touch it, right? Like if I look at this without, like I said, I'm not an expert, but it feels like he wants to flirt with this. Do you think there is a chance we will retest the 70 down here?
It could test it. The only good news I will explain later is that liquidity should be favorable now to Bitcoin. But until now, liquidity, and this is why we got this correction. And for sure, you're very aware because there are lots of talk. I discovered nothing new. There are lots of posts on X, global M2. So take the monetary base M2. Take the global one, which is the monetary base of the big countries divided by the value of the US dollar, and then you get a proxy of global liquidity. And this is I discovered nothing, but you go to Onyx, and there are many people that really have great studies, and there is a great correlation between global liquidity M2 and the price level of Bitcoin, but there is a lag. So when liquidity peaks, then Bitcoin still goes up for a while and then it starts to go down. And the same happens when Bitcoin bottoms and maybe liquidity has been going up for several weeks. But right now, I think it's one of the last slides we will see later. Liquidity should be by mid-April, so it means now, tailwind to Bitcoin. So if I look at liquidity, I think that maybe with a little bit of luck, this support is not going to be touched, or if touched, is going to be really very briefly, and it should go up. Because furthermore, the weekly chart is bullish. Don't forget that.
Would you say it's a good time to buy Bitcoin if you have maybe a longer time frame?
I would wait. I would go to the daily chart and I would wait for the breakup exactly. The thing was the March 24th highs to be broken up. Furthermore, is very close from our present price level, so it's
Exactly.
not that you get too late. So you see, and you see, this is the beauty of using two time frames. To time, you can use the daily chart because it will be more reactive, while you keep the big picture with a weekly chart.
I'm a buy and hold kind of guy. So for me, the weekly, actually, sometimes the monthly, it makes a lot of sense what you're saying, right? You can have a very bullish outcome for the next 20 years, but you can speculate on a daily, on an hourly, on a 10 minutes. It's your time frame of choice. This beautiful volatility can make you a lot of money if you know what you're doing. It's like surfing
But
waves.
I want to give you a full disclaimer. With gold and Bitcoin, I trade, but I also have a core position that is never traded. So I don't want to bullshit people. So I'm a trend follower at heart. It is my life. I trade. But for me, Bitcoin and gold are two very special assets, which is inflation protection and, I would say, Armageddon,
Yeah.
Armageddon protection. What happens if the dollar blows up? And if the dollar blows up, the euro will also blow up, and the remini and everything. So for me, Bitcoin and gold are two very special assets. I trade, but I always have a core position in physical gold and Bitcoin that is not traded. There is a drone. Okay, I have to live with that. But on the other hand, I also trade gold and Bitcoin. But one thing is the core position. Bitcoin and gold is an insurance that pays me money. It's the only insurance you have that the insurance company it's paying you to hold insurance, because when you have a life insurance or your car insurance, you pay to be insured. But for me, gold and Bitcoin, they are they're different, but to some I love both. Are the only insurance, because for me they are insurance. Is an insurance against monetary debasement, or also Armageddon. What happens if the whole financial system goes under? Things like that. For me, it's an insurance, but on the other hand, it's an insurance that is paying us to hold it. Since I have this insurance, there is a core position that it's never sold, because you don't sell your car insurance. You don't trade your car insurance.
You buy the insurance,
Exactly.
right?
You buy and hold. You
Yeah.
buy your car insurance and you hold. What happens if one day, and this can happen to Bitcoin and gold, more to Bitcoin. Let's imagine one day there is a monetary reset, something. The world is really in a very complicated situation. We were talking about a farm before. So what happens if one day we wake up after the weekend and they say, look, monetary debasement, whatever, and then suddenly Bitcoin pops to $300,000 or 1 million, because or whatever, because one government says, look, now Bitcoin is going to be more than this strategic reserve, so that we're going to peg the dollar to Bitcoin, whatever, anything can happen. I wouldn't like to be with my stupid charts say, no, now the trend is bearish and I wait for a breakup, because wait, there was a breakup, but the price exploded higher. This is what I was explaining before. I think that quite soon, I think by mid-April is around the corner, liquidity trends should be a tailwind for Bitcoin, because look at the chart. This is global M2 that I was referring. So it was in a very strong global M2 until a couple of months ago. And you will see two red horizontal lines, and you see the two red horizontal lines, and both have been broken up by a new trend. So it's the same technical analysis. So those previous highs have been surpassed, which means for me it's clear the trend now is up. So it doesn't take a genius to see it on the chart. We have taken out two significant previous highs, so now the trend is up. There is a lag between a positive trend for global M2 and Bitcoin price action. Some say 70 days, others say 110 days. Well, this is like a cult, a sect. But nevertheless, be it 70 days, 110 days, now, quite soon, this liquidity should influenciate Bitcoin. And I would like to make a final remark, because these liquidity trends also affect the stock market to a lesser extent. So there is a higher correlation between liquidity and Bitcoin than liquidity and stocks, but it also affects stocks. And I was asked recently, well, basically, okay, Bitcoin moves high more than stocks, but they more or less move the same. But I think one day Bitcoin will decouple from stocks. Until now, liquidity goes up, stocks go up, and Bitcoin goes up more. But I suspect one day Bitcoin will be what it's supposed to be, which is the greatest insurance. And maybe one day the stock market will go down because there is financial reset, whatever. And then suddenly, this morning, you will wake up and see Bitcoin at 300, 400,000, whatever. And it will decouple. And you will see one market going down while the other goes up. So now I think that Bitcoin still hasn't come of age, still is a minor, because eventually Bitcoin will move according to its own forces, not according to a surrogate of the stock market. Maybe I'm wrong, but I think one day we will see something like that. I believe in Bitcoin, so I believe the rationale of Bitcoin is the same of the rationale of gold, and even better, it's digital gold. It's something that cannot be inflated away. People say it doesn't have intrinsic value. This is bull. Gold almost okay. It can be used in jewelry, but many things cannot have intrinsic value, but they can have exchange value and store of wealth value. So for me, this is clear. I believe in Bitcoin. I believe it cannot be inflated away. It can be a store of value. Furthermore, it is resistant. But there was this paper shown in the slide that, well, people that are more intelligent than I say that Bitcoin could be vulnerable to a 51% attack. And well, the gist of it is that the more expensive Bitcoin, the higher the price, the more expensive it is to defend it against hackers, against a 51% attack. I lack the intelligence or the knowledge, but this is the only if. But also gold has ifs, because gold is, you cannot take it with you. So gold is an insurance, but if the going gets tough, it's not going to be so easy for you to access your gold.
I would argue the opposite. I would say in order for you to conquer 51% of the network, you'll have to put so much money into it. And the more the price is going to grow, the more money is going to cost. And also, arguably, I would say the more Bitcoin propagates, the more it becomes decentralized, which means it's going to become even harder to get 51%, right? So this is referred to double spending, I guess, which means when you control the network, you can revert transactions and then you can cheat, I guess, the network itself. But the amount of money required to take 51% of the network today is going to be more expensive than Bitcoin itself. So I have not seen the paper. I will have a look into it, because if you only read positive things about stuff and if you only speak to people they are positive about things, you never actually use your brain to think. So I like to every now and then to have a different approach or different point of view. Thank you. I'll
Always
definitely
good
have a look at this.
to second guess. Sometimes it's always good as investors, and furthermore, we all have exposure to. But maybe my personal take is I have Bitcoin, I have gold, I have land, I have stocks as a trend follower. For stocks, there is no core position. Stocks is buy, sell, buy, sell. And okay, sometimes in Latin, carpe diem. Enjoy the day.
In Italian, we say cogli l'attimo, which basically means carpe diem, translated to the T. But gracias, Manuel. Thank you. Of course, in the description, you will find Manuel details. Please make sure to follow him, because I love your content. And God, oh boy, what a masterclass you gave us today. So really appreciate you coming on the show and sharing your knowledge. Where do you see Bitcoin going in the, I don't know, in 2025? Do you have a target, a top target? Do you have a bottom target? What do you see in the charts?
I will have a target once Bitcoin breaks above, I think it was the March 25 highs. And I will tell you why. I use one thing that is called the rule of seven. Unbelievable. It's a book written in the 1970s. And once you get a new bull market, you measure the first leg of this new bull market, and then you can make projections. There are three projections of price targets. It's unbelievable. It works. It works for me better than Fibonacci's, and it really works. I have the book. It's really an old book, but it works. And but of course, I need the trend to change. So now, while the knife is, I'm a technical guy. I'm not a fundamental guy. Not because I despise fundamentals, because I'm not intelligent enough. So my toolbox is quite limited. I'm good at what I do, technical. So the only way I can give you something reliable is once our bearish trend on the daily chart has shifted bullish, and this will be if the, I think, March 25th highs are jointly broken up by Bitcoin and Ethereum. And then, of course, then I can measure the first leg of this new bull market, and then I can make projections. This is a so-called a rule of seven. If you go to my website and on the search button, you can write rule of seven, be it with figure or with letters, and you will find something, and it works. So I really don't want. If you want my gut feeling, this year, I think there are going to be lots of cross currents. So I don't know, but I really distrust my gut feeling. But I would say maybe 120. But I need to speak. But now the trend is bearish. I need to see the March 25th highs being broken up.
Nice. And then from there, measure the next move. It makes sense. I mean,
Exactly. Then I take the leg and then I make projections.
when we break the March all-time high, we can jump into another call and you can show me the projection on the charts. That'll be awesome.
Always a pleasure. We can do it. Yeah, we can do a short video. Yeah.
It's been great having you on the show. Thank you so much for your time.
De
Really
nada,
appreciate
prego.
it.
Prego.
And thank you so much for watching. I will see you on the next one.